Hello, I'm Darryl Montgomery, organizer of the New York Investing Meetup. The following is part of a presentation given at one of our recent meetings. It's one of 5 videos in the series. Now, let's hear Bob Rubin discuss how to profit from the falling dollar.
2 or 3 basic strategies for dealing with the kind of market environment we have now. And that's the environment that Darryl has spoken about in the last couple of meetings. Number 1 is buy foreign assets. And the reason for that is because these are priced in currencies that are rising in value against the dollar, which means that no matter what else happens to those investments, just because of the currency translation, they're going to be rising in value. So if, let's say, you buy some foreign stock, the stock itself goes up by 10%, but the currency goes up by 10% against the dollar, you wind up making 20%. You've made money both on the increase in price and the investment, and because when it's converted back into US dollars, there's a separate gain there. So that can accelerate your profits in any of your investments. Directly, you can buy foreign currencies, and we'll be talking about how. Currencies that are rising against the dollar. You can buy stocks from countries that have rising currencies against the dollar. And finally, you'll see that there's a good number of US stocks that get at least half of their revenues overseas, and they can actually profit from currency translations as well. In fact, if you look at recent market results, you'll see that there's a certain group of large cap stocks that have done rather better than most of the market. And that's just the ones we're talking about here. It's typically the big companies, the multinational companies, that do a lot of that kind of business. My second basic strategy is buy tangible assets. And the reason for that is it simply takes more weak dollars to buy them. If you get something like a brick of gold, right, the gold has pretty much of a constant value. But if the dollars that you're using to buy that gold become weaker, then it takes more dollars to buy a constant quantity of some tangible asset. So as the currency weakens, tangible assets tend to rise in price if they're priced in dollars. That means that commodities are going to be good. Real estate, obviously not real estate in South Florida right now. We're talking about real estate in rising markets, which might be overseas, or it might be someplace in the U.S. Where the market continues strong. And finally, collectibles, which is something that most people don't usually think about, but that too can be a tangible asset, and we'll see how these are very strong now. Last strategy would buy deep value stocks, and that's simply because you're in effect buying tangible assets at a discount. By a deep value stock, I mean one where you're actually paying less than the net asset value of the company. And you can find that typically in smaller stocks. It's very rare in big stocks because they're so well analyzed. But if you look at like small companies, it's relatively easy to find little companies where the current market price may actually be less than the net liquidation value of that company.
To find out more about the New York Investing Meetup and to see the notes referred to in the video, please go to our website.